Omotunde, the head of research at Afrinvest, is choosing a day when the market has turned bullish to appear here once again on Business Morning, and it's good to have you. Thank you very much. It's good to have you when the market turns green. Yeah, perhaps the whole climate yesterday was about going green globally. So the stock market turned from red with a very solid green. So give us your take. Do you think the storm is over for this market bleeding?
Well, in the equities market, you can't really say when the storm is over, but there are factors to look at, but perhaps the movement in global equities also suggests to us the much of connection that we have, when you talk about financial integration, and how capital flows from different markets. We've seen that the consistent drop we saw in the market, for about 11 days before we saw that upturn on Monday, and going into Tuesday, speaks of the sort of weak appetite that foreign investors or investors have for emerging market assets, and Nigeria has not been excluded from that. We took our beating, but it was clear the market was set for a rebound, and that was what we saw on Monday and Tuesday.
When the market goes in a bit of a tailspin, as it were, what do you look at for? Fundamentals, isn't it?
Well, fundamentals is one thing to look at, but fundamentals are always there. Companies' fundamentals don't change drastically, and it takes time before the fundamentals change.
Unless they're closing shop.
Well,
or regulators hit them with something.
Yes, except the regulator is coming with a shock to the market, or the company publishes a number, or there is a policy out there or a mishap that will have any significant implications on their numbers.
So speaking to the macro fundamentals.
Yeah, macro fundamentals for now appear very sound, even though we are not where we should be, when you analyze the macro data from what we have currently relative to what we used to have.
In terms of the state of the economy?
Well, the state of the economy, it's always something that comes to the front burner, but again, without going into how well the government has performed, there is stability in the macroeconomic space, and that's one thing, to look out for. So within the macroeconomic space, there are no major triggers, that should get investors panicky, except, of course, the anticipation of the 2019 general election. So macro stability, we could say we have macro stability in the system as we speak, but generally what investors will want to look at, especially for investors that are not long-term, players, they would want to check when is the appropriate time to, track the market. So market is going down, fundamentals may look good, comparison with other markets may suggest that you're undervalued or underpriced. Investors want to catch in on such opportunities to be able to ride the curve when the market is about to turn, and that's what we are beginning to see.
We're getting to half time, which is the first 6 months of the year.
True.
So you think it is time for institutional investors to begin to look at their portfolio and whatever mutual funds or fund managers at half year say, look, it hasn't been a pretty year so far, at least from February to date. Perhaps we need to put some strength behind the market so that at half year I look a little bit good, because you're not too sure what the political environment will be from July.
Definitely we had our worries, when we were looking into the year 2018. We had advised a much more cautious strategy for the half year.
First half or second half?
For the second half of the year,
That was your projection?
That was
your suggestion?
And that was our suggestion for the market at Afrinvest. But again, I don't want to be the carrier of bad news, but I do not think that we are going to see the institutional investors you mentioned coming big into the market, especially as we proceed into the second half of the year. These are the issues. We see what is currently playing out in the market in terms of the much of participation. By far, the massive or the biggest institutional investors, or if you like, fund managers in the market, are the PFAs. Analyze their performance, their play in the market relative to the entire size of the market. When you check for the bonds, 49.9% of FGN securities are held by these so-called PFAs. The data gets more scary when you're checking the corporate space. The corporate bonds are held almost 100% by PFAs. to be specific, But when you drive down the data, even the recently issued green bonds, and even the Sukuk bond, they are significantly subscribed by these institutional investors. But on equities, they are 5%, there are new regulations by PENCOM on the multi-fund structure, which should allow them to be much more participatory, if you like, in the what you call variable instruments, unlike the fixed income.
Mutual funds.
Yes, variable instruments such as equities, Now, the point I'm trying to make here is that even though, you make mention of something around the macros look good, the company's fundamentals are beginning to change to the positive, but you see institutional investors here in Nigeria taking the back seat, only waiting for foreign investors to come and move the market before they join. The much of that, as much as we know that, for example, the PFAs are managing funds, of retirees and every other person, the stakes are high, but notwithstanding, when the market is clear on fundamentals, we should be able to take, certain bold decisions to participate in the market. And what you're seeing now, again, is a reflection of how much of risk the fund managers are willing to take on Nigeria. But to balance the perspective is to say that what is the depth of our market relative to the fund size that they have to invest, and that's why you see all of the ingenious products that are coming up with, mutual funds, further deepening of the market by ETFs ETFs tracking equities, these are issues to talk about. But for second half, we do not expect that investors will be bullish on equities. We expect that they will be much more cautious, even foreign investors who appear to still be in the market, but are just trying to watch. Clearly, market fundamentals are good, when you compare us to other markets.
If I'm long-term focused,
yep.
When should I get into this market? Would it be the second half when the rest of you who has made money in the first half have gone home?
Clearly speaking, there are always opportunities to make money or to, make capital gains in the market. So timing is very crucial. Look at what we have currently. If you look at the 11-day of losses that we recorded, which culminated to about 10.2%, of losses for the 11 days. You saw market year to date slipping to 3.7% negative. Some investors are already beginning to look at this. Within the 14-day window, the technical indicator of 14-day RSI went as low as 7. And as we speak, we've had 2 days of positive gains, and this is still within the negative. Yes, the 14-day RSI is still below the overbought, oversold region, which shows that there are much more opportunities for significant upside in the market. However, you have to be sure of which securities you're getting into, so you have to analyze on a sector per sector basis, without going, mentioning names specifically. You see banks that are trading, currently below what you could say is the short to medium term pricing or valuation in terms of price to book. These are clear cases of opportunities.
So let's do banks within the time we have. What's your outlook on banks as we're having some new reports, or one new report about the top banks, and the reports from Exotic Capital says there are reasons to be positive, looking above the macro?
Absolutely. For us, we've always been, positive about the Nigerian banks. We've mentioned it over and over, the resilience of these banks. Come what may, the economy is booming, or the economy, in fact, the banks made more money in recession, and it's quite amazing. And for us, we are still positive on the performance or what to expect for the Nigerian banks. We know that the macro issues, the macroeconomic headwinds that we suffered in 2016 going into 2017, we first saw some recovery, actually affected the performance of these banks. But the major drag has been from the angle of non-performing loans, which is still high, but again, if you remove the outlier banks, it still appear to be within threshold for most of the banks. So NPL is something to worry about, but again, if you look at the sector exposure of each of these banks, you can begin to see some clear cases of improved activity in the oil and gas space, for example. We know that this fall in global oil prices affected, most of the loans that have been created within the oil and gas space. But we're beginning to see a recovery in this space, and some of those loans are moving to performance territory.
For the banks, one of the issues raised is what you call the currency issue.
Correct.
And do you think we're beginning to see a bit of a shift with what happened over the last 1 week or 2 weeks, as exotic capital is looking at 360 to a dollar this year as an exchange rate that will likely impact the financial statements of the books. Of course, when there's a move in exchange rate, your MPL and what you call that provisioning also shift in terms of the numbers.
Depending on your dollar-denominated asset exposure.
Exactly. Is there something to keep in focus, perhaps not to be too worried about?
Well, for the banks, looking at the exchange rate factor, there are reasons to be worried. Looking at the development over the last 2-3 weeks, in terms of demand and supply, and the CBN's play in that market. You cannot overrule the impact of the CBN in that market. Clearly speaking, CBN has done so well in stabilizing the market, but the issues that market watchers want to be careful about is whether the CBN is still given to, a peg, so to speak, in the midst of all the different windows that we have for accessing foreign exchange. There was a story about the CBN governor conducting a check on the banks to ensure if
compliance,
compliance
sales,
to 360
yes.
rate. Again, for us, these are things that some foreign investors especially will be looking at, and even though there are positives within that market in terms of, how much you've built your reserves, in terms of how much the CBN has been able to support the market. But again, because we know that there is still a big elephant in the room, which is the oil market, the oil prices, which you cannot tell, even when the outlook looks positive. For any shock that, happens, it means that investors will start panicking by the time they see that the capacity of the CBN to support.
So in terms of exchange rate, do you think 360 to the greenback or the dollar, it looks like the new figure on the street that the bank should be looking at, not 353?
Well, that seems like click, but I think what the report you're referring to was trying to talk about is the reporting in their financials.
Yes.
You know that banks hold dollar-denominated or foreign currency-denominated assets. Of course, by the time exchange naira against the dollar moves, all other currencies, follow in line. So what you see is, as at the last time of reporting, they used 330 as the exchange rate for reporting their numbers. For example, if I'm a bank and I have up to 30% of my assets denominated in dollars or in foreign currencies, generally, whenever there is an exchange rate move, you see a jump in naira terms in terms of the assets I'm carrying. So if I have dollar-denominated assets that are not performing, when there is an exchange rate move to the downside, it also affects the value of non-performing loans that are in my book.
Yeah.
So if they use 330 as at the last time, what it seems like now, because apart from the 305 that is the official rate at which the CBN transacts with the IOCs or all other petroleum marketers, what you see in the market is something within that 330 to 360. So it seems like by the time we are ending this current financial year, the banks may have to, or the CBN may advise the banks, because on the advice of the CBN, to move towards using that 360 as an exchange rate. That, again, will have an impact. Remember that when we had that depreciation in 2016, that's when you saw most of the banks booking, very high non-performing loans. But some banks recorded it to the positive because they had gains in foreign currency, foreign currency assets, and that was booked as part of their income.
We're wrapping up, but let's take a look at the peaks. If you look at the banks, do you agree that among all the lenders, Zenith, UBA, and GT, Stanbic and FB and H, including maybe Access Bank, those 5 or 6 come among the top? From
our own radar, there are 4 banks that we rate very high, not necessarily in terms of the fundamentals that we have, analyzed. Because if you look at all the banks, pretty much there are 5 banks that are clearly distinguished in terms of their fundamentals, ranking by way of by the level of their ROE: Stanbic, GT, Zenith, Access, and UBA. For us, there are 4 top picks that we have, and this is in relation to how much of strategy they have to, the internal strategy they are putting in place vis-a-vis the results that we've seen in terms of their return on equity and how the market perceives, this stock. So clearly, guarantee is it's top pick for us, but the issue with guarantee is the pricing in the market currently, and even in the report you're referring to, guarantee is still a highly priced, stock, by their own valuation. Yes. Only that the market price has shifted significantly.
Much lower than that of Zenith and
exactly.
UBA. Interesting.
Thank you.
Let's continue to have this conversation. Let's look for another day when the market moves, then you move. And head of research at Afrinvest, Robert Omotunde. We'll take a break. When we come back, it's the world of plastic and the way forward.